So my first question is about positioning and inflows. When you look at all the data there, is it suggesting things are going to rise further from here, or are we getting a little bit stretched?
Thanks for having me, Wilfred. It's suggesting both. So the path of least resistance remains up. We've just had the highest weekly inflow into the equity market ever. So people are putting it to work. Charles Schwab's reported that there's been a massive increase in account opening, and there's more liquidity on the way. Having said that, we are at rather elevated prices. But this is all about liquidity. You've heard me say this over and over again. It is technical. The path of least resistance is still up over time.
When you see something like Tesla, which has been a darling, of course, of the market, buying Bitcoin, which has also been a darling of the market, do you start to think this is marking the top, or is it a bigger transition that's bullish for both assets?
So that one has a specific element to it, which is the broader acceptance of Bitcoins. And it's not just Tesla that is saying you can use it as a form of payments. It's others too. But you could have had in that sentence so many other things. You could have had SPACs. Look at the amount of SPAC activity we have had. Everybody and their brother and sister are opening SPACs. You could have all sorts of things that indicate that we are frothy. But remember the notion of a rational bubble. Yes, we are in bubble territory, but it's rational because of all this liquidity.
And the liquidity keeps flowing, Mohamed. The latest is Secretary Janet Yellen, in her first call with G7 finance ministers and Treasury secretaries today, brought the go big message there, that now is the time to do something big on the economy. And yes, they were talking about sort of technicals of expanding the IMF firepower through SDRs. But what is the potential for more stimulus, not just from the United States at this time?
So she took the message go big to apply both to national budgets, where she's going to have less success, but also to apply to the IMF SDR issuance, which is basically an issuance of currency, that if it happens, countries will wake up and find that their deposit account has gone up at the IMF and they can spend it. So I think she will succeed on the global liquidity element because most other countries will go along. But she's not going to be able to move other countries very much on their own budgets. The U.S. is going to be way ahead. And if you just do the numbers, it is incredible how much liquidity is likely to be injected in this economy. The big question is, will it create an accident? At what point does a lot of liquidity become too much liquidity?
With that in mind, Mohamed, are you a believer that the dollar is due to weaken further, despite already having been soft of late? And why isn't gold performing better with all of this liquidity out there?
So first, I'm not a believer that the dollar will weaken a lot from here. I think we've seen most of the weakening because it is about more than just liquidity. It also has to do with vaccine distribution, where we dominate Europe. It has to do with the dynamism of the economy, with foreign direct inflow. So if you add everything up, it doesn't look as bearish for the dollar. So that's one. Two, gold, part of the attractiveness of gold has gone to Bitcoins. And I think that explains a lot where Bitcoins is as well. Gold is no longer seen as the only defensive vehicle. Now, Bitcoins is starting to attract a lot of people that are in there for what I call negative reasons. You have the positive reasons, people that believe it's going to be a global currency, that believe it's going to be a form of payments. And then you have the negative reasons, people who just are protecting themselves against all sorts of things.
Shepard Smith here. Thanks for watching CNBC on YouTube.